Let's take another example. This is the trial balance as on 31st December 2017. Opening stock 1000, purchases 2000, sales returns 100, carry is 200, electricity 700, short term investment 4000, furniture 1000, copyrights 2000. And on credit balances, capital 2000, sales 4000, purchases returns 300, accounts payable 1000, secured loan 2000, interest on short term investment 700, profit and loss account 1000, and closing stock 300. And the adjustments are prepaid carries 100 and accrued interest on short term investment 50 rupees. Accrued means generally this term is used with the outstanding income. It means still we have to receive interest on short term investment 50. If you look at the trial balance on credit side, there is interest on short term. It means interest on short term investment has been received at 700, but still we have to receive more, and that amount is 50. It means actually we were supposed to get interest 750, but we could get only 700, and 50 rupees will be received in future. It is due from the provider. So first of all, let's make trading count, profit and loss count and balance sheet. Trading count for the year 31st December 2017, opening stock, purchases minus purchase returns, and on credit side by sales minus sales returns by closing stock. Then profit and loss count on credit side by gross profit, and in balance sheet on liability side capital plus net profit minus drawings, and on asset side closing stock. So we are ready with the formats. Now first of all, let's take the adjustment, means the items outside trial balance, and we are assuming that adjustment means these are the items which are missed from the trial balance. We have to include all these things now. Let me explain you how the assets are taken from different points of view. Means anything we own that has economic value is our asset, just like building, furniture, etc., etc. But anything that doesn't have any economic value, that's not our assets in the firm, just like honesty of our manager, hard work of our workers. Of course, these are the assets, but not assets for our balance sheet. So anything that we own and has economic value, or any thing to be received in future. Suppose we have to receive rent in future, interest in future, or we have to recover money from the customers in future. All these things are called assets. Or any money or services we have already paid, just like if we have paid rent in advance and the benefit will be received in future, that is our asset, prepaid rent. Or we have paid advance to the suppliers, that is our asset. So in assets can be seen in different angles. Anyhow, now I am going to talk about adjustments. First of all, closing stock. Closing stock will be taken to the credit side of trading count, then it will be taken to the debit side of balance sheet, means asset side, 300 rupees. I have already told you that first of all, sort out the adjustments, then come to the trial balance, then it will be easy for you. Adjustment, prepaid carries 100. You know the journal entry? Prepaid carries account debit 100 to carries 100. This is the journal entry for prepaid carries. So prepaid carries will go to the debit side 100 rupees. You know, carries goes to trading account, but this is direct expense. You know, on one side prepaid carries is rupees 100, it will go to the debit side of balance sheet, means asset side, and then two carries 100. You know, this carries goes to the trading account. It means it will go to the credit side of trading account, but instead of taking to the trading account on credit side, it will be deducted in the inner column of debit side. So on trading account, write down 2 carriers minus prepaid 100 in the inner column. Now come to the accrued income on short-term investments. Means this is the income we couldn't receive this year, it will be received in future. So what will be the journal entry? That will be accrued interest debit 50 to interest 50. So accrued interest, it will go to the debit side of balance sheet. So come on debit side of balance sheet means asset side, accrued interest 50, write down in the balance sheet, and then come to the credit side of profit and loss count, because interest belongs to profit and loss count. All incomes goes to profit and loss count credit side. So it will be taken to the credit side of profit and loss count. So in this way, accrued interest has gone to the debit side as well as credit side. Now let's start our question from trial balance. Opening stock, debit side of trading account 1000, purchases, debit side of trading account in the inner column, sales tons. Instead of taking to debit side, it will be taken to the credit side in minus items, means it will be deducted in the inner column minus 100 in the sales. Carries 200, it will be taken to the debit side of trading account. So 2 carries 200 and it's already there prepaid minus 100. So 200 minus 100, 100 rupees will be outside. Then electricity, indirect expense 700 to the profit and loss account debit side. Short-term investment, this is asset, it will be taken to the asset side of balance sheet 4000. Furniture 1000, it will be taken to the debit side of balance sheet, it is an asset. Copyrights 2000, it will be taken to the debit side of balance sheet, means asset side. Then capital, it will be taken to the inner column of the balance sheet. Then sales on the credit side of trading account, and 4000 minus 100, that will be 3900 in the outer column. Accounts payable 1000, this is liability. Accounts payable means it includes creditors as well as bills payable, means this is the total of creditors and bills 1000. And then secured loan 2000, it will be taken to the credit side of balance sheet. Secured loan means we have taken the loan from some party, maybe bank or some another financial institute, 2000, and we have given them the security against this loan. Maybe our building, maybe land, maybe furniture. Secured loan means when you take some loan and gives something, some asset to the lender as a security. And then interest on short term investment 700, this is income, it will go to the credit side of profit and loss count. So it will be written down by interest on short term investment 700, and profit and loss count, it will go to the credit side of balance sheet. Profit and loss count means in the last years we made a profit of 1000, but it was not added to the capital, means not transferred to the capital. So in profit and loss count, there are two items on the credit side, by interest 700 and by interest 50, that is accrued. So the presentation will be by interest on short term investment 700 in the inner column plus accrued interest 50 in the inner column, and in the outer column it will be 750. So in this way the trading account credit side is 4200, and on trading account the gross profit will be 1400, and 1400 profit and loss account credit side by gross profit 1400, and then to net profit 1450, and this net profit will go to the balance sheet in the inner column in the capital. So capital 2000 plus net profit 1450 minus drawings 0, and outside I mean to say in the outer column 3450, and the total on both sides will be 6450. So you have seen, whenever there is prepaid expense, number one, it is deducted in the inner column of that item whether it's trading account or profit and loss account. And number 2, accrued incomes, the incomes to be received in future. First of all, they are added to the income on the credit side of profit and loss account in the inner column, and then it is shown as asset in the balance sheet. So in this question, we have shown accrued interest on short-term investment 50 on asset side, and secondly, we have shown in the inner column, I mean to say we have added rupees 50 to the interest on credit side of profit and loss account.